Okay, beautiful. Right. So we're just going to go over some of those concepts, how market moves. And we know that market moves in one of three directions. I did really just true, but one of two is either it goes up or it goes down or it goes sideways. So when you have a market going sideways, we talked about this last time. Market doing that. Okay. So as it's doing that, so as it's moving up, it leaves clues. So this is an up move. It leaves what we call swing points, okay, or turning points. It leaves clues for us to see where these turning points are. And some of the concepts I'll be talking about is already on the school platform that I posted on or that is pinned on our platform. So you do well to, if you are not very familiar with it, it would be good for you to familiarize with yourself with it. Log on to the platform and go through all the course notes on it. Right. So there are some concepts, that are usually discussed when you talk about market movements. So you hear things like double tops, double bottoms, support and resistance, higher high, higher low, lower low, lower high, break above, stop, and all this. These are all very different concepts. Okay, but we're going to concentrate. We're going to concentrate more on valid ranges. So we're going to concentrate on what a valid range. What I want us to achieve tonight is for us to be able to look at any chart and then just know immediately, is it going up or is it going down or is it going sideways? We need to be able to determime those, market direction as quickly as possible. Right. So for me, in my time of trading, there are these basic, will I say, candle formations that usually are triggers for me to know when the market wants to start shifting, when the market wants to turn. And then, so I just categorize them in three main formations. So they are the typical engulfing candles. So you have engulfing candles, you have what I call kangaroo tails, and then you have what I call dojis, right? So engulfing candle, like the one you see right here, is when you have, so the red in this case here signifies a downward candle or a bearish candle, and then the blue, the green one indicates a bullish candle. So in our case here now, so this is a nice, this candle here, this one here is a nice bullish engulfing candle. It engulfs the candle period to it. So the candle before it engulfs it. Okay, so that indicates that on the next candle, so on the third candle here, there is a very high probability that the candle will also be going up, right? So some people will say that the buyers are very strong here, and then they're likely to continue going up. Okay, now the same thing happens for the bearish scenario, where you have a candle or a set of maybe 2 or 3 or 4 candles, and then you have a big bearish candle. And that implies that on the next candle, after this big bearish candle, there is a high probability. So note what we're saying, that is a high probability. It's not a given. Sometimes you may get an engulfing candle and price will just go the other way. All right. So, but it just says that the probability of the next set of candles going in the same direction as this big engulfing candle is very high, and therefore it gives you a confidence. You have some sort of confidence. Okay, so the next one is some people call it hammers, some call these ones shooting star, all sorts of names. There are all sorts of nomenclatures for them. But I just call them kangaroo tails. As long as it has a tail, a nice tail like you can see here, as long as it has a tail, then I just call it a kangaroo tail. And then it also depends on where in the market these things happen. So we'll look at the chart shortly, and then we'll see samples of these three things here. So then this one is a doji, what I call a doji, or what is normally is known as a doji. There are candles that market goes up, then goes down, then just ends up, in the middle like that. So it's an indecision candle. So market is trying to decide, should we go further up, or should we just stop and reverse, or whatever we want to do. All right, so it's an indecision candle. Okay, so let's go to the charts quickly. So this is which chart is this? Okay, this is gold. This is a gold chart let me go to the daily. This is the daily chart of gold. Now, you can see, if you can see the charts, can you just type in one there in the chat box? Let's see if you can see these charts. Okay, wonderful, wonderful. Okay, so between these points down here, I'm going to mark a point. Between this point down here and this point here, up here, is market, from your own eyes, from your own observation, is it going up, or is it going down, or is it going sideways? What do you think? If it's going up, put 1. If it's going down, put 2. If it's looking like he's sideways, put 3. So we're just saying between this level here and the top there. Oh, okay, maybe I gave it away. Okay. Right, very good. Good. I'm seeing some responses. Good, thank you. So you can notice that, okay, if you came in on this chart, this is the daily chart, as I mentioned earlier. Can you take note of this candle here, this one there? It's it's an engulfing candle, this candle here. That is an engulf. Can you see that it engulfs the previous candle? And then what happens after it? The next candle goes up, and it doesn't even just stop there. It goes on for many days after. Right? Okay. Now, let's look at, okay, this is just bullish, 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 bullish everywhere. Okay, let's look at, oh, this thing is very bullish. Oh. I want to look at the converse. Okay, let's look at this one now. Good. Now look at this candle. Can you see this nice kangaroo tail? This very candle here. After that candle, what happens? Market turned and started going back down. Right? You can see indecision candles here as well. These are all where are they? These are, you see dojis, you see kangaroo tails, and then eventually it falls. Okay, look at this one here. Is a doji as well, and then after it, what happens? At least for the next candle or the next 2 candles, price moves up, right? So that is all we're talking about when we say that market has it has a way of showing us what it wants to do, and it's left for you to decide that, okay, I agree that the market is likely going to turn, going to go up, or is going to go down. So I've just shown us simple examples of these 3 candles. Right, so let's move on very quickly now. So this, we talked about valid range, and valid range is discussed on the platform, on that school platform. So if you haven't registered, register on it and sign up for the lectures, for the full course, so you can understand this valid range very well. I'm just going to touch it very briefly. All we're saying for valid ranges is that we know that market moves in certain directions, okay? So let's say it's okay, let me use a black color here. Sorry, just a sec. Okay, so let's use the black. So when price is moving up, okay, it starts from a point here, and this is a high. This is known as a higher low. Let me mark it like this, higher low. This is known as a higher high. Don't mind my drawing, no. This is known as a higher low. And then it continues in that same sequence like that for a market moving up. Now, how would you know when a market starts going down? When do you know when there's a pullback? And when do you know, how do you determine when market is going to begin to change and go in the opposite direction? One of the clues we just discussed now is the fact that if you get bearish engulfing candle at this top, for instance, where this high is, then you begin to think to yourself that, okay, maybe market is going to move down, at least for a short while. And then when it comes down here and it gives us any of those three signals, your bearish engulfing, your bullish engulfing candle, your dojis, or your kangaroo tails. Okay. Now, part of the issue that we also have is that different people define market structures in different ways. So, for instance, as you're looking at this chart now, where would you say is your so generally speaking, between this level here and this level here, market is going up, right? So generally speaking, you say that, okay, where are going to be your swing points? Are you going to take this? Are you going to do something like this? So if it comes down like this, goes all the way up, comes all the way down, then goes all the way up, and comes all the way down, comes here, then do that, do this. Okay, so generally it's moving up, right? But how can you can also, by the time you define it, this becomes, so somebody can define it like this, right? Another person can define it even more granular like this, like that, and then like this. So the market is totally, you define it yourself as you see it. So another person can define it like this, right? So different people can define it in different ways. But the important thing is that you need to define it in your own way and be able to stick to that consistently. You have to stick to the way you define it consistently. So so I'm going to give you one of the ways that we discuss in the platform, on that school platform. So we need to have, let me move on quickly. So to have a valid range, we need to have an opposite candle, a pullback candle, and then we need to define how many candles we need to have for us to define it as a pullback candle. So first of all, so in an uptrend, for instance, in this case that we have here, so this is just a quick sample. It's just going over what has been discussed in the class. So this is a bullish candle, this is a bullish candle. By the time you have a bearish candle, once this closes, immediately you know that, okay, this is an opposite candle and it can be the beginning of a possible pullback, right? So once you have an opposite candle, so that's the first leg of it, okay? Now, and then the same thing too for the down candle. So when candle is going down, another one is going down. Once you have an opposite candle, so that's the first thing there. So the first thing there is that you have to have an opposite candle, right? So what's the next thing that you need to have? Let's look at this. So this is just an opposite. This an example of what was written there. So you have, so market is going down, and then immediately, boom, you have an opposite candle. So you think to yourself, okay, market will probably pull back there. And then it goes down, boom, you have an opposite candle, right? So let me rush through this now. So that's an opposite candle. So pullback candles. Now, our pullback candles it can, so the next thing is that we need to have a pullback candle. Now, this pullback candle can also be an opposite candle or can be the same candle as the other one. But the important thing is that the high, if it's in an uptrend, the top of that candle must be lower than the last candle. Okay, so to explain that a bit more, let's look at an example. So in this example, so just look at those two candles going up. So the high of this candle is right here. The next candle, even though it's up or an opposite candle, the high of this candle is lower than the candle here, right? So that gives us another, so that defines our pullback candle. So once we get an opposite candle and we get a pullback candle like this, so we know that market is likely going to pull back at that level. Okay, so the next thing is that we need to then define how many candles do we need to use to define our retracements. So let's go to the chart again to see some of that. So I'll need to go to a lower time frame here now. So let me go to the 15 minutes for us to see this one now. Okay, so on this 15 minutes, this is 15 minutes chart of gold. So we see price has been going up, right? Now, look at the high of this candle. Look at the next candle, right? Even though it's actually an engulfing candle, but let's just look at the concept that we talked about now. So we have a candle, the high is up here. The next candle, the top of that candle does not go above it, right? So that is a pullback candle, and that immediately tells us that, okay, price is likely going to pull back down to do a retracement. And what did it do? It actually retraced, right? Now, in this market, as it's going up and then it's coming down now. So when would you say market has changed direction again? Now, look at this. Now, in this case, we didn't get a clear-cut bullish engulfing candle, but it was formulated by these two candles. These two bullish candles then engulfs this one. Okay, but that's for an advanced class. So, but don't mind that. Let me take your attention to this candle here. That's a nice doji, right? It's a nice doji candle that you can see there. So if you are just studying market, the nomenclature, look at a nice doji candle, it pulled back, a nice doji candle, and then the next set of candles, it pushed it up, right? So that is how we define what our pullback is and what our the candle that is going to then push the next leg. That is how we begin to know them, right? I will really urge us to go through that class so that we can get a better understanding of these things. Now look at, let me see, I want to see a nice trend. Okay, let's go to a higher time frame. Okay, a nice trend. Right, so look at this nice trend here now, going up. So we see market pushing up from here, from this low here, pushed up. Once it got to this level, look at what happened. It gave us a sideways market really for a few candles. Okay, this is a 4-hour chart, but look at the nomenclature. Look at, you have a high there, and then you get a pullback. The next candle actually pulls back. The next one pushes back up, gives us a big high. Then the next candle comes back down, and then the next one, the next push up, you see this nice engulfing candle. So on each candle, you're able to determine what is market likely going to do next. Okay, and you see that it pushes up until it gets up here. You see a nice bearish engulfing candle there. Now this next one, it does not go that far. It does not push it all the way back down because market is very bullish. Then what did it do next? It gave us a nice bullish engulfing candle, and that bullish engulfing candle then pushes it all the way up. So all we are doing here is that we're looking at what is happening. How can we determine this swing here? how can we determine this swing here? That is all we have done today for us to know what our valid range is and to know when that market is likely to push back or push up, right? And the same thing happens when market is vice versa. Now, when market is going this way, when it's going downwards, right? You want to be able to determine, has it reached a high? What makes it a high? What makes it a lower low? You know, when you have your break of structures and all that, right? This is just a recap of that. And I hope this gives us some insights or some inkling into what is in that course, if you have not gone through the course, but also gives us an understanding of how each candle tells a story and how you can determine from the nature of the candle, is price going to move up or is price going to move down? All right, so that is it for today. I'll open it up now for questions. Do we have any questions? You can just unmute your mic and ask your question. Oh, we totally understand everything. If we totally understand everything, maybe I can do, let me see. Is there any pair any one of us would like us to just look at and see what
Good
happens?
evening.
Good evening.
Good evening, sir. Well done, sir.
Yes, sir.
Thank you for the teaching once again.
Yes, sir.
I wanted to ask, you were talking about the price going up and the price coming down. Do you does it indicate the timing the price will go up? Is there a time indicator with it? Maybe the price will go up for like 1 hour, 2 hours, so that you could program yourself so that before it start coming down, you have already cut off your trade. Is there a timing for it? How do you know that?
Very good. That's an excellent question. So that will relate to the time frame you are on. So for instance, if I go to the daily charts, okay, on this daily chart now, each candle forms is completed in 24 hours. So that means that when I get this engulfing candle here, this engulfing candle that we see here now, I know that the next set of candle, there's a high probability that in the next 24 hours is also going to go up. So we have 24 hours. Now, if I go to, let's say, a 4-hour chart, okay, let's look for bullish engulfing candle. Okay, look at, I want to get an ideal one so that you can see it properly now. Okay, so this is a nice one. Though I've seen some other ones, but this is a nice one. Okay, it engulfs, the body of this candle engulfs the previous candle. Now, but this is 4 hours, so it will take 4 hours for the next candle to also form, right? So you know that in the next 4 hours, this candle is like the next candle is likely to go up. So let's go to let's go to 1 minute. I know some people don't particularly like 1 minute, but let's even look at 1 minute charts, for instance. You see plenty of that. Look at this one now. So depending on the time frame you are on, look at this nice bullish engulfing candle. And this happened in 1 minute. So the next minute, you're expecting that the next candle too will go up. So as long as it does not take out the low. So this is the low. So in the next few minutes, you see what happened. Price went up. Right? So it depends on the time frame you are on. If you're on the 1 minute, you know that you'll be counting in minutes. If you're on the 4 hours, it's in the next 4 hours, you should expect to see something.
Okay.
Thank you, sir.
Thank you very much.
Do we have any other questions? If we don't, let me just quickly do, GJ showed me Pepe today. I was trading GJ on the 15 minutes. Do well, it's all good, yeah. So this 15 minutes candle, see, between here and here, market was moving up, right? So I came to the charts around London session, around this time here. So I had seen this high here. So once I saw this high and I saw the next candle, which was an opposite candle, I knew that, okay, retracement was probably likely to happen, right? And then my valid range was between this high and where was it? This was where I put my higher low, right? So I then thought to myself that, okay, with this pullback now, I'll put an entry here, I'll put another entry maybe somewhere there. But for some reason, I was actually trading from my phone. So for some reason, I put my stop loss just somewhere there, just below this, where this spike happened. So price came down. So I was already anticipating that at some point, price was going to move up. So what happened? Price came down, took me out, and then went up. So I said, okay, no wahala. Let me see what is happening next. So what happened next? Up here. So I saw candle here. I saw it retracing, and then I saw it move up. And then once it broke this level here, I thought to myself, that's actually a trend change, or what some people call it a chalk. Okay. And then so I was waiting to sell between here and here. And then what did price do? It just stopped me out again and then went all the way up, right? When I was looking at my journal, I then thought to myself that actually what I should have done was to be ready for the market. Once it stopped me out here and it showed that it was likely to continue moving up, then if I wanted to actually take another trade, then it will have given me, I will have entered this trade here, and then it will have given me at least some profits, right? So I had a losing day today, but it's all good. It's part of the learning experience we keep having every now and then. So, but with hindsight now, you can look at it and say, okay, this market went up, came down, went up, did this, came down, and then went all the way up. But it's at the heat of the moment. What are you doing? How are you seeing the market when it's actually forming? Yeah, within those 15 minutes, because this is 15 minutes chart, within those 15 minutes, what are you seeing? Right? Later on, when I went to my 4-hour chart, I got which was where I actually started from, my 4-hour chart. So this is my 4-hour chart. Once I saw this candle, this was where London session started, around this candle here. I thought that, okay, even though there was this big bearish candle, then price was likely going to move up. It moved up. It was on this candle here that I thought, okay, it wants to start moving down. So my bias was that it was going to move down. But anyway, price decided to do what it wanted to do. So, but that's just a typical example of how market moves. Look at this very good example here. See a lot of so the market gives you clues of what it wants to do. Once it got to this high here, look at it, gave you a kangaroo tail, or what, a hanging man, gave you indecision candle, gave you another indecision candle, gave you a bearish candle, gave you a nice engulfing candle, right? You can see all those things happening. Nice engulfing candle. So it's already giving you a lot of hints, and this is on the 4-hour chart. It's already giving you a lot of hints that it's likely going to push down, because you see, before then it has been pushing all the way up, and this is a 4-hour chart. The previous week it pushed all the way up. So with this already gives you clues as to what the market is doing. So all we just talked about today was to know when the market, that swing points, that's what we want to know. All right, those swing points, that's where we want to know. Those swing points, that's what we want to know, when it's going to move. And those are the kind of things that you look out for. You look out for those. Where is my thing now? Okay. So you look out for those candles. Yes, these ones. You look out for bullish engulfing candles. Look out for kangaroo tails. Look out for dojis. And then when you combine it with your when you combine it with your valid ranges, when you combine that with your valid ranges, then you're able to look at any market and decide, what is this market going to do in the next 1 hour, if you're on the 1 hour chart, or in the next 15 minutes, if you're on the 15 minutes chart. Okay, somebody is asking a question. Would you advise a beginner to enter a 15 minutes trade or go for longer trade, e.g. 4 hour? Okay, well, as per which chart to start, if you're a total beginner, I would suggest and advise you start on a higher time frame. So maybe even the daily or the 4 hour charts, for instance. But if you have a mentor, for instance, that you can rely on, then whatever charts they are using, whatever time frame they're using, you can use that because you already have somebody is holding you by the hand and showing you how you can do the trades on those time frames. Okay, but if you're on your own, I think it's better to start on the higher time frame so that you have a longer time to make your decisions as to what you want to do, whether you want to go up or go down or stay out of the market. Okay. Beautiful. Do we have any other question?
I have another question to ask.
Yes, sir.
There are some, I've heard about whether robotic or robots to determine the market or to trade with robots. How good are these robots? Does this robots?
Oh, thank you for that question. Robots are good. However, my own personal thinking is that whatever the robot is doing is what you yourself can use your naked eyes to see. Right. And the person whoever configured that or programmed the robots, there are certain criteria they put in it. So there are some robots I've heard of, they work excellently well, in combination with your AI and all those things. They use all sorts of combinations. But for beginners, I would say just stay away from it. Anything you don't understand, don't dabble into it. If somebody sells you a robot and tells you X, Y, Z, and you don't understand it, don't buy the robot. If he's telling you the robot is using RSI or using MACD or whatever, let the person explain it to you so that you understand it. But by my own view is that you can use your own naked eyes to see what is happening. I mean, look at this chart. See, look at between here and here. The market is going up. Now you see a big bearish engulfing candle. What do you think next? Market is likely going to come down. And those are all the criteria. Those are some of the things that the robots does. It just looks at these things and tells you, okay, market is going to go up. To show you buy here, sell there. But I think you can use your own normal eyes to just see these things yourself, and you're good to go. Okay. Any other question?
And the last question I want to ask, you have been talking about mentoring and mentorship and the cost. Is there a fee for the cost? And if somebody, is there a fee to register for the school? And then is there maybe another question? If the person wants to trade, he always contact the mentor and the mentor gives him what he's trading on, then tells him when to stop. He always guide him. Is that what you mean by that?
Well, okay. There are many ways. Like a number of us on the platform already have our trading academy and we mentor other people, right? But what I've also done is to also give us my mentors my mentor gave us a free what do you call it now? A free platform, a full trading course. Okay, there's a full trading course that I pinned on the platform, on our Billionaire FX platform, and this platform has this course. It's called a school. Is the school.com. The link is there, so just go there. There's a full course, full trading course, full FX trading course that goes through structure, goes through market structure, goes through risk management, goes through psychology, goes through everything. All right. So there's a full course there. So that's what I mean, that when just go on that course, go through it and get a good grasp of what we're talking about so that you can learn to trade properly. That is a free one. The ones I will offer, for instance, is not free. The ones others may offer as well is not free. Okay, that one we can hold.
This particular one that is pinned is free.
This one is free. Yes, this one is free, and it also gives you very good content, and it's in fact very interactive too on the platform. If you engage with it, they have very nice interactions with students. Okay, it's a good place to start. Wonderful. Okay, so we'll call it a day then. And then we look forward to another class on Monday, same time, 8 p.m. Hopefully by then, our billionaire, congratulations to billionaire James for the addition to his family. We thank God for him and we rejoice with him. He may be ready by then to continue with the crypto class, but if not, we'll just continue with our, we'll go deeper into other aspects of trading. Okay, so thank you very much, everybody. We wish you all the best. Thank you very much. Have a good weekend. Lovely.
Thank you very much, sir, for the training and time.
Thank you, sir.
God bless you, sir.
Thank you. God bless you. Thank you.
Thank you. Thank you, sir.
Thank you.